Good morning, everyone. This is Marshall Gittler bringing you the morning comment for October 1st. The focus in the market yesterday was commodities, not currencies, as several commodities, in fact, many commodities, suffered large declines. WTI plunged, and natural gas was down even more. Copper and nickel fell sharply, even though China took several steps to support the housing market. Now, copper is used in electrical wiring, and nickel is used in making steel, so the large declines in those particular metals was a strong vote of no confidence in the Chinese measures. Agricultural commodities were generally lower as well. The problem is rising supply of commodities, or the problems are rising supply of commodities, slowing growth in China, and a surging dollar, which makes commodities more expensive in other currencies. It's no surprise then that the Australian dollar was the weakest of the G10 currencies, followed by the Canadian dollar. The Kiwi, the other commodity currency, fell too, but it was nowhere near as much. I think that's probably just because it's gotten hit so hard recently anyway. Now, Europe should be a beneficiary of lower commodity prices, of course, but since the big concern in Europe is deflation, falling commodity prices just make it harder for the ECB to reach its inflation target. So net-net, it's going to be negative for the euro, oddly enough. I'd expect, however, of course, the three commodity currencies will continue to be the ones most affected by lower commodity prices. Overnight, we had Japan's Tankan, the Bank of Japan short-term survey of economic trends. The indices were generally better than expected. Now, I would have expected that to be positive for the yen, as it was initially, just by a small amount. But over the rest of the day, the line of causation seemed to be from the Tankan to stocks to dollar-yen. Since the stock market was up slightly, dollar-yen was up slightly too. In other words, the yen weakened. That's the trend I expect anyway for dollar-yen. And from a technical point of view, we see dollar-yen moving still higher. As for today's indicators, it's a final PMI day in Europe. Such with the manufacturing PMI figures for September from several of the European countries, including the UK, and the final figure for the Eurozone as a whole. The UK manufacturing PMI is estimated to be up slightly to 52.7 from 52.5. That could support sterling today. In the U.S., the most important indicator we get is the ADP employment report for September, 2 days before the non-farm payrolls. The ADP report is expected to show that the private sector gained slightly more than 200,000 jobs in September. That would probably be dollar supportive and add to the dollar rally. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.